Hello, everyone. I'd like to start this presentation today with a big thank you for everyone who showed up after lunch. I really appreciate it, but also a big thank you to everyone at this conference for organizing it and giving a young impact venture like ourselves a great stage to introduce herself. Before we dive into timber finance, a little bit about myself. My name is Erik. I'm half Swiss, half Canadian. So I guess you could say I was destined to pursue a career in timber or finance, but as luck would have it, I had a unique opportunity last year to combine those two fields, and I helped found the Timber Finance Initiative along with two other seed investors. Privately, I'm also a very proud forest owner. My brother and myself, we own and manage 1.3 hectares of forests here locally in Zurich, Switzerland. And forestry has really been a big part of my family for many generations. We're often among multiple generations when we do go in the forest together. So I'm very happy to have this unique opportunity to combine these two passions. The Timber Finance Initiative wants to make a significant contribution to addressing climate change through the strategic promotion of the forest and timber industry. The construction sector is annually responsible for around 40% of global carbon dioxide emissions, and an increasing part of this is actually attributed to the choice of building materials. What we've seen in the last 30 years is amazing improvements being made in the operational efficiency of buildings, the energy efficiency, up to the extent that today we build houses which are literally net zero in the operational phase, which has led to the following. As a result of these great developments, which we're very happy for, up to 100% of the building's full life cycle emissions, they can now actually be attributed to the production of construction materials, the choice of construction materials, as well as its disposal. The construction sector is very unique in terms of climate opportunity for many reasons. The first reason, it's really responsible for a large part of annual GHG emissions. And the second, it's traditionally also very well financed. But the missing link, the most important factor, is that we have an alternative. Mass timber construction in the last decade has undergone a quantum leap. And for the first time, we have a bio-based, renewable building material that's available at scale. These technological developments that I'm talking about, it means that timber is not only being used to build your Swiss mountain chalet, it's being used for highway bridges, high-capacity bridges, elevator shafts, basements, and it's even being used to build skyscrapers. I keep on talking a lot about timber, and the reason is simple. For every cubic meter of timber that we deploy in the construction sector, we will inherently store 1 ton of carbon dioxide. And we're also going to avoid emissions from concrete and steel, which annually are responsible for around 10% of emissions. We also need to keep the following thing in mind. In the next 2 decades, 60% of the world's building stock is going to be torn down and it's going to be built up again. And this overall setting really creates a once-in-a-lifetime opportunity to deploy timber at scale and create carbon sinks in our cities. Our mission is to develop financial solutions which will help drive the decarbonization of the built environment. On the finance side, we're developing and marketing financial products which will unlock sustainable investment opportunities for investors, but also measurable climate impact. Long-term aim is really to develop and launch a financial product for every asset class. The first thing we've developed is the Timber Finance Index, and the more products are to follow, a timber private equity fund, a timber carbon removal fund, as well as a timber-based mortgage. On the carbon side, we're also quite active. We're developing the world's first timber-based carbon credit methodology. We're going to help establish mass timber as a negative emissions technology. This methodology will enable stakeholders for the first time to accurately quantify, to certify, and ultimately monetize the value of this carbon which is stored in timber buildings. And the reason why we're doing all this is quite simple. This is an underlying belief that this combination of sustainably managed forests and timber construction, that this is the most scalable, cost-efficient negative emissions technology. Our first product, the Timber Finance Index, we developed this index for a very simple reason. We had an investment hypothesis to test. Internally, we often speak of a timber turnaround, which has characterized timber markets dating back to 2020. And the underlying assumption was that these favorable technological developments, these regulatory changes, these societal changes, that they've left a measurable growth impact, not only in timber private markets, but also in the listed timber equity space. Our index, the Timber Finance Carbon Capture and Storage Index, it tracks 30 leading listed equities from Europe and North America, which operate in this forest-to-frame value chain. And what differentiates our index from others is that we have a very specific focus. We focused on these producers of engineered timber. And engineered timber is this material which enables us to build skyscrapers and store carbon dioxide in the built environment long term. Our index performance, we tracked it against a basket of other indices. We tracked it against the Swiss Market Index, the MSCI, as well as 3 existing forest and timber indices on the market. And what you see is quite simple. Since September 2017 to March 2020, there's no significant out or underperformance. But since March 2020, there's a significant and permanent decoupling in outperformance. We identified 2 performance drivers. The first was the strong increase in lumber prices in 2020. Lumber prices, they've normalized around their 5-year averages right now, but the outperformance has really remained resilient. And the second performance driver that we were able to identify was a significant increase in the carbon removal certificates. And this is really quite remarkable because it allows us to conclude that the specific focus on engineered timber, the storage of carbon dioxide in our buildings, that this has led to a lasting outperformance not only to the SMI, but to thematically similar products in the forest and timber space, which primarily invest into short-lived forest products, such as the production of pulp and paper. Our second area of business is in carbon solutions. We're developing the first mass timber carbon removal methodology under internationally leading climate standards. And basically, why we're doing this is because carbon removal is key. If you read the most recent climate reports, 2 things become evidently clear. Number 1, the need for immediate action, and the second is the need for cost-efficient, scalable negative emissions technology, removals. If we're going to make good on our net zero commitments, removal is essential. Avoidance, reduction is also important along the way, but we need these removals in a transition to a net zero society. Carbon removal solutions that are out there already, I'm sure you know all of these, but what's interesting to see that we've been able to identify mass timber carbon capture and storage, that we can effectively deploy this technology for prices as low as $25 per ton, and we can reach an annual capacity of up to 2 gigatons per annum. To put this in a slightly different context, the Potsdam Institute for Climate Research has recently published the following: a transition to timber cities by the year 2100. This would avoid 100 billion tons of emissions, which represents approximately 10% of the carbon budget required in the 2-degree scenario. Our timber carbon certificates, they have impact on 2 sides of this forest-to-frame value chain. Firstly, on the demand side, we're going to be creating a financial incentive to build with timber. And this is extremely important because we're going to be able to influence the choice of building materials. Just a little side note, this financial incentive is specifically important because the typical timber building is still marginally more expensive than a concrete or steel building, and these additional revenues are essential to help create an effective demand-side stimulus. On the supply side, we want to activate revenue streams from the voluntary carbon market, and these additional revenue streams, they're really essential for the implementation of sustainable forest management practices. Our forests, they feel the effects of climate change today, whether we believe it or not, and we need these additional revenue streams to make our forests more climate resilient, more biodiverse, to ensure access to this resource long term, but also to ensure that we have a habitat for millions of plants and animals. Our markets, our finance solutions, our carbon solutions, they're going to be benefiting from macro trends. On the finance side, we will be benefiting from the increase in timber construction rates. It's expected that the number of mass timber buildings in the US will be doubling every 2 years and reach 24,000 units by 2034. This significant and long-lasting growth, it's going to create diversified investment opportunities for investors along the entire forest-to-frame value chain, but it's also going to unlock measurable climate impact. On the carbon side, we will be benefiting from the growth of the voluntary carbon market. What we see there is significant growth, year on year, 250%, and we expect the traded volume on offset markets to reach 300 billion by 2050. What will be driving that growth is scalable, cost-efficient carbon removal, but also this solution will be driving also, net zero for institutional clients. Thank you.
Thank you. We have 1 more minute, so I have a question. What is the pace of replenishment versus construction?
Yeah, it's interesting. What we've been able to model with our index, we have 30 leading listed equities in that, and basically these companies, they own forest, they manage forest, they use it in sawmills, secondary, tertiary production, and they're using about 33% of the annual growth.
Okay.
So basically, you could do this every year, on and on and on again.
Thank you. Thank you very much. Thank you to Timber Finance.